Hi, I'm here with Rick Burgess of Connect Lending. Rick, please tell us about Connect Lending and the services that you offer.
Well, Paolo, we're a lending platform. So, kind of like a bank. A borrower might walk into a bank to get a loan. What we do is we actually have a platform where we match up people that are looking for a loan with their borrowers that are right now about 1,900 different lenders across the country.
Great. And how do your services differ from that of your competitors?
When we created our platform, we did it with a very specific reason. We went out to all of our competitors. There's only a handful of us out there, put ourselves out as platforms. The thing that makes us very unique is we're an advisor-driven site. So what I mean by that is we don't go out marketing to small businesses. We go out advisors that support small businesses. So as a lending opportunity comes up, they have a way of directing their client, if they can't help them, into our platform. Then our platform takes over and pushes it out to our lending network. So that way, what we found is by the time someone gets online and starts looking for a loan via the internet, they're usually someone that's already declined at a few banks. And that's a loan that's very hard to place anywhere to start with. Does that make sense?
Absolutely.
Okay. And then, so to that point, we interact with our advisors on at least a monthly basis, and our lenders on a monthly basis. So we know who's lending, we know who has what interest, and we can direct the loans appropriately to get a high success of funding.
Perfect. And now you have three types of clients. You have advisors, borrowers, and lenders. How do you add value to each of these different clients?
Sure. If a borrower were to find us directly, it's very strange that they would walk in and have a choice of 1,900 different lenders. And let me back up one by saying, really what we are is we're commercial loans. So we're looking for small business loans, lines of credit, those kind of things. When we came out, what we decided was, instead of trying to do one thing very specifically, what we did is we went with a very broad brush. So we have 22 different kinds of loans that we do right now. On one side, and this kind of dovetails with why you asked that question. On one side, we actually have credit repair. So credit repair is something that we do for clients directly. So what happens is a lot of times they can't get a loan because there's no credit history or there's a credit problem. So we actually can correct individual credit problems as well as corporate credit problems. And then we start walking up the food chain of what lending is. What I mean by that is we have unsecured startup loans for people starting a business. We have equipment loans, all facets of it. Purchases, repurchases, loan backs, all kinds of things that are way too deep for this discussion. Cash flow funding, asset-based funding, purchase order finance funding. Then you go up to the food chain again. Now we're in real estate. So we'll do commercial real estate, both for businesses that occupy the space as well as for investors that want to occupy the space or not occupy the space. And then again, one more step up the food chain is we actually have a fairly sizable pool of candidates that we take equity raising and fundraising and VC and angel to. And Paula and I know each other because of that side of the business. So that's kind of the starting point, and let me answer your question. So for a borrower, they can ask what kind of loan they want. We've done all the heavy lifting, understanding who's loaning in what space, and through our answering some questions, they have a way of matching each other up. So we have a high likelihood of getting you into a front of someone that will close that loan for you. For advisors, 90%, 99% of all of our loans come from our advisor network. And why is that? Because we can take a client from an advisor and we protect them and insulate them from all the different things going on in other institutions that do loans. What I mean by that is, let's just say, for sake of example, I have a banker that brings me a loan that was declined at his bank or her bank. That lending opportunity now goes to every other bank on the street. They're going to ask for investments, merchant service accounts, deposit accounts, all the things that advisor gets paid on. is going to leave the bank or a lending institution. For accountants, for attorneys, for people like that, it's a great way to add value to the services they're already providing, so they can actually be a more rounded advisor. On the lender side, the last category, they're always looking for good quality people to loan money to. Right now, the joke in my space is fairly simple. Banks only lend if you don't need money. Well, everybody else needs to grow their business. So what we do is we have all the different ways to grow people's business. So we've been called an alternative lending platform before. But with 22 different categories of lending, we do a lot of traditional lending as well. So the value for my lenders is very simple. Only give them what they want. We only give them the way they want it. And at the end of the day, when we match people up, we actually have our lenders call our borrowers directly. So they do their own underwriting, they do their own relationship building. There's no miscommunication because they're actually talking to the person looking for the loan.
And Rick, what are the challenges that you faced marketing your product to these three different groups?
It's a great question, and it goes back to the structure of who we are and why we created ourselves this way. For the lenders, it's fairly easy to find lenders. It's fairly hard to find quality lenders that are lending money. So, everybody's lending box, if you will, changes from time to time. So on our site, they can actually change what their focus is. So we don't show them things that they don't have an appetite for. So that's a self-fulfilling, right? The second side of the advisors, it's hard to find advisors because they're getting bombarded every day by people who say, I can help you, I can do this, I can sell your client something. Really, we don't want to sell your client anything. We want to give them options for what they've already asked for. So we're, basically supporting the advisors and telling them we're here and constantly reminding them that there is an option is our biggest challenge. Okay, so borrowers, very rarely do we interface with borrowers because we don't go looking for them. And there's a reason why we don't. Let's take fundology. By the time I go and find out that you're looking for a loan, you've already talked to your banker, your accountants, your attorneys. You've gone down a lot of the channels that you've already would normally go down looking for a loan. So by the time I build a rapport with you, build the relationship with you, give you enough trust in me to give me an opportunity to do your loan, you've already exhausted a lot of ways to go get a loan. So the cost of getting a new borrower is extraordinarily high. That's why we don't go after borrowers directly. We use intermediaries to meet their borrowers.
Great. And what are the ways that you're able to match lenders and borrowers?
Well, there's something like a secret sauce, which we won't go too deep into. But when we started creating this, I sat down with a bunch of friends of mine that were commercial bankers and corporate bankers and people like that. And what we came up with was each one of our categories has minimum underwriting standard built in nationwide. What that means is I'm never going to have someone with a 500 credit score looking to borrow $2 million. The math just doesn't match. Well, each one of our buckets or silos has a criteria each in itself. So what we did was, it's kind of elaborate on the back end. We laughed that we were built for functionality, not for sexiness. So the tool is very simple. Every one of our lending categories has different levels of lenders in it. So some lenders will lend more specifically to someone with a lower credit score than they will with a higher credit score. So everybody in the world is trying to find that perfect candidate to lend money to. Well, those people have no problem going into their normal bank. So what we did is we segmented every single category multiple times, so we have multiple options for every client. Our tools, our algorithms, all of our matching technology, it's a very long process getting into how it was developed, but really what it does is it matches the questions that you answer, which is really only ask 14 questions for specific loan requirements are done with the underwriters when they directly call.
Great.
Does that help them? Does that help understand that?
Definitely.
Perfect.
And Rick, you have a very interesting revenue model. Can you touch on that?
Sure. We understand that there's lots of options out there for lending and lots of choices. So what we did is very simple. We built this structure to be as automated and as efficient as possible. So once an advisor is comfortable using the site and they put out multiple loan, over and over and over again, really our support structure for that is very simple. We just have to have a relationship with the advisor. So what we do is, as a basis of our business, we actually give 50% of anything that we make off of processing and pushing these loans is back to the advisors. So in some instances, we can't do that. Some bankers and corporate bankers, they can't take revenue. So what we'll do is we'll push it out to a charity of their choice. We'll help them with soft market powers like Chamber of Commerce memberships, things like that. Or lastly, what we'll do is we'll actually take what they do and apply it back to the loan to help benefit the client. So we have lots of options, but typically 50% of everything we do goes back to the advisors that put it on. Where we've been finding tremendous success is some of the commercial brokers that actually, put the buyers and sellers together. Typically, it's up to the borrower to go find financing after that. Well, really, what we tell people is very simple. We'll go find the financing for you. We'll actually include you in that model of, the structure we have. You can actually monetize that client. So that's really a big piece of it. But again, it depends on what constraints the advisors have on how we pay for them.
Sure. And Rick, I know you're busy, so I have one last question for you. How do you plan on growing Connect Lending in the next couple of years?
Sure. Every lender and advisor that comes on the site talks to us directly before we start. Because once we get them in the system and they're on the system, it's a very automated process and very function flow friendly, which means we want to have a personal relationship with everybody on there. What I've been finding is lenders are telling other lenders in different categories about us. So finding lenders that want to lend money is fairly simple, it seems. But keeping up with who's lending, how they're lending, all of that is really where our challenge is. And then most of my day is spent finding new advisors and introducing our services to them so they know that there's an option out here and we support them, not compete with them. So right now we're in 29 states. We have a fairly high close ratio for loans that come in because of how we do it. And all we're looking now for is just more up to bat through our advisors so we can grow the model.
Great.
So the challenge is just finding more advisors.
Sure. Well, Rick, I thank you so much for taking the time to sit down and chat with me.
My pleasure.
And if you're interested in learning more and connecting with Rick, go to fundology.com.